Many people in this country probably think about the estate tax as a Wall Street issue or a Hollywood issue, and they may not realize that it's a Main Street issue. Prior to the first cannonball being fired in the Civil War, our company was in the forest products business right here in Casco, Maine, and I'm very proud to be a part of the 6th generation of my family to work for our company. We own approximately 15,000 acres of timberland, and we have 3 sawmills, and we manufacture lumber. Here in Maine, we operate 9 retail lumber yards that primarily provide lumber and building material to contractors and homeowners. And it takes 80 years to grow a pine tree. So in the 160-year history of our company, we've had only 2 complete crop cycles in that period of time. We're actually growing trees today for a generation of people, our family and others, who are not yet even born. There's a great deal of uncertainty around helping a business plan to pay the estate tax, in part because the estate tax rate keeps moving. On the one hand, we aspire to grow our business, to create more jobs and economic activity, and yet on the other hand, we know that as we do that, the future potential estate tax obligation just continues to go up. And for a family business, it's very tough to plan for that, and it's an unfair competitive disadvantage if you consider our situation, say, vis-a-vis a public company who does not have to deal with the estate tax threat to the future of their business. It's all open land that the citizens of southern Maine and people that visit this part of Maine are able to access and use for free. One of the primary reasons why we might be forced to sell some or all of that land someday is to turn those trees into cash in order to pay the estate tax bill. It's not a case to think that Hancock Lumber or most family businesses simply have that cash sitting around that they can go grab to pay that bill. Well, the problem is not, could the Hancock family pay the estate tax bill? Because the answer is yes. The problem is what the Hancock family would perhaps have to do to the business in order to pay it. The most likely outcome is that those forests would be sold off in small parcels for development. The irony of the current estate tax situation is it's a net revenue loser for this country. So people often look at the income that's received from the estate tax, but they don't understand or look closely enough at the revenue that's lost from the disincentive that encourages family businesses to stay small. It makes no sense to have a capital gains tax at 15% and an estate tax, say, at 45%. In that example, if you sell your company, you get a 15% tax. If you try to keep your company, keep working, keep going, you get a 45% tax. What the federal government is effectively doing is offering a major tax discount to sell your family business as opposed to keep it. I can't think of any tax structure more backward, frankly, than that. Part of the American dream that I believe almost everyone in this country would support is if you work hard and create opportunity and have a business and care to continue to reinvest in it and keep it growing and keep it creating jobs, that's something people should support, and that's something that government should support, not discourage through an estate tax.